tell us why you're so heavily invested in commodities when the rest of the world is not really interested in commodities as much as you are?
Well, Schroders have a specialist fund which invests in commodities, and we have about $3.5 billion under management for clients around the world. What we're seeing a lot more interest in that area than we were. And I think there's two reasons. One is a negative one, that they think bonds and equities are expensive and cash gets no return. The positive one is that they see commodities as providing protection against inflation, against geopolitical risk, and most important, they see commodities as cheap. Commodity prices really having fallen over the last 4 years, whilst equities and bonds have risen.
Can we expect a bull market on the commodities?
Yes, I think so. I think we have already this year seen the oil price move from $45 to $60.
Yes.
It's a considerable move. We think we'll see oil continue over the next year to appreciate, and natural gas as well.
What about agricultural commodities?
And what's interesting about agriculture is that the long-term bull market case for agriculture is very strong. That around the world there are obviously a lot more people,
Yes.
they're eating more food, and in particular emerging market countries are switching from a starch-based diet to a protein-based diet. So more meat, more milk, more animal feeds, and most importantly they can afford now to import food. So a huge increase in demand, and on the other side supply is constrained by a whole series of factors, and you see a growing shortage of arable land around the world due to development, due to desertification, the lack of water. So demand and supply for agriculture to us looks very attractive, and we think we will see a bull market in agriculture over the next 10 to 15 years. Now, within that, different commodities will move in different periods. So in 2014 we think some agricultural commodities, 2014-15 we see some agricultural commodities as going up in price, but others as falling.
What about oil and natural gas? So what do you think about their future for the next year?
I think oil is very cheap. What we have seen is a sharp increase in demand, both because kind of the Western world, the US, Japan, UK, and even now Europe are starting to grow again, but also because of a fall in the price. And that's had a direct impact on demand, as you might expect. So you're seeing record car sales in the US, you're seeing record use of gasoline in the US, and so demand has certainly picked up there, and you're seeing pickup in demand elsewhere. On the supply side, we do think the big elephant in the room in the last few years has been the huge increase in shale oil production in the US, but we expect shale oil production to actually fall in the second half of 2015. There has been a huge cutback in the number of rigs deployed in the main fields in Pennsylvania, in Texas, and in North Dakota.
Well, thank you very much for your time and for your information. Thank